Good evening, everyone, and welcome. My name is Aditi Sen, and I'm a managing director at Americans for Financial Reform. And I'll be moderating tonight's virtual town hall on uncovering President Trump's crypto corruption. For those who aren't familiar with AFR, we were founded as a coalition of over 200 civil rights, consumer, labor, business, investor, faith-based, civic, and community groups to push for financial justice for ordinary people and accountability for Wall Street and other wealthy and powerful financial interests. Again, we want to thank you all for joining us this evening to talk about President Trump's unprecedented crypto corruption and discuss some of the ways that we can all collectively fight back. Tonight, you're going to hear from three great experts with backgrounds in cryptocurrency, in tech policy, and legal ethics on the many conflicts of interest that exist between President Trump and the world of crypto. After they give their initial remarks, we'll move into a moderated panel discussion, followed by a short Q&A based on questions from all of you in the audience. So if you would like to submit a question for our speakers, please click the Q&A icon at the bottom of your screen and drop your question into the Q&A box. We want to use that instead of the chat to make sure that we don't miss it. We'll close with a send-off and some next steps on how you can all get more information and take action. But before we hear from tonight's panel of experts, I want to tell you a little bit about why it is so important that we collectively tackle Trump's crypto corruption. Since the moment Trump was elected into office, he has been laser focused on pushing crypto. He's pushed through crypto-friendly legislation like the Genius Act. He's installed crypto-friendly regulators to top agency oversight roles, and he created a crypto task force in the White House to advance the industry's agenda. It's been clear since day one that big crypto invested heavily into the Trump regime, and now they are cashing in on that investment. Trump's crypto-friendly regulators have delivered. They've dropped a slew of crypto enforcement cases. They're deregulating the financial rules that should apply to crypto, and they have given pardons or a free pass to crypto billionaires who are guilty or suspected of financial crimes. Many of these firms and the CEOs that are getting this kind of white glove treatment are donors to Trump's political outfits. Some are business partners, and several are both. And the administration is making it clear that no matter the cost for everyday investors who are really left with very few options to recoup their losses, this administration will continue to give crypto billionaires get out of jail free cards. However, it's not just Trump's crypto billionaire friends who are getting who are getting richer off crypto corruption. It's literally the Trump family's own net worth that has increased by billions of dollars in the past year alone, thanks to all of his crypto self-dealing. So whether it's participating in shady backroom deals with agents from foreign governments, like his World Liberty Financial deal, or selling his family's scammy meme coins to both bilk investors and offer Oval Office access to the highest buyer, Trump's efforts to use crypto and the office of the president to enrich his and his family's own personal wealth seems to know no bounds. Unless we step up to fight back against this corruption, Trump is going to continue to put our economy, national security, and more importantly, our democracy at risk. So now I'll introduce the first of our speakers. Molly White is an independent researcher and writer covering cryptocurrency and the broader technology industry. She writes the newsletter Citation Needed, where she examines the cryptocurrency industry, tech policy, and the influence of technology on society. She also founded and maintains Web3 is going just great, a project documenting how cryptocurrency and Web3 projects are failing to live up to their promises. So, Molly, I'll turn it over to you.
Thank you. Get my slides. Okay, so I'm going to give some background on where this all came from, what the cryptocurrency industry has been doing and why, and really the scale of their political spending that we've seen since late 2023, going into the 2024 elections, and then the spending that's been happening recently as we enter the 2026 midterms. So when the 2024 elections were coming up, crypto was really under threat. In 2022, the FTX cryptocurrency exchange collapsed, and that was after a year of devastation throughout the cryptocurrency industry as prices fell and many companies went under. We were seeing politicians calling for more regulation, new legislation to handle cryptocurrency companies. There were crackdowns on Coinbase, Binance, Gemini, Ripple, many cryptocurrency companies facing enforcement actions or in some cases criminal charges over financial crimes, such as with Binance, who was charged with crimes, and their founder was sentenced to 4 months in prison ultimately in 2024. There was this perception among people in the cryptocurrency industry that the crypto industry was under threat, that there was this war against crypto. And so they really sprung into action when it came to 2023, 2024 political spending. You're used to hearing about big oil or big pharma when it comes to political spending, but crypto actually was one of the largest sources of corporate spending in the 2024 cycle. In 2024, the cryptocurrency focused political action committees raised more than $197 million and spent $133 million of it. Most of that was raised by a super PAC called Fairshake. They operate as sort of one network, but there are multiple PACs involved called Defend American Jobs and Protect Progress. And the primary backers of Fairshake are pretty big names in the crypto world. Those are companies like Coinbase, Ripple, Andreessen Horowitz. All of those companies contributed around $45 million apiece to Fairshake. Then there were other companies like Jump Crypto, the Winklevosses, who run the Gemini cryptocurrency exchange, Kraken, Circle, which runs the USDC stablecoin. All of those firms pitched in to create this enormous political spending machine. Ultimately, the PAC spent in 67 congressional races. 55 of those went the way they wanted them to, so candidates they supported won their elections, and candidates that they opposed either were defeated in the primary or in the general election. They generally took the strategy of backing the winners. So this graphic shows all of the candidates that they supported during the 2024 elections, and this is prior to the actual elections, the projected chances that they were going to win their elections. So as you can see, the majority of these people were strongly favored to win anyway. But this allowed the super PACs to create this narrative that they were really reflecting the will of the people, that the crypto industry had this decisive win in the 2024 elections. And messaging was almost as much a portion of their strategy as the spending itself. So they did a lot of PR, both to everyday voters and to candidates and their campaigns, to convince them that crypto is a major issue that voters care about, that there's this strong group of crypto voters who would support a candidate who is pro-crypto, potentially even over other major issues in the election. Convincing them that they really needed to sign on to the crypto agenda, both to potentially get money from these crypto PACs or avoid opposition spending, but also to get votes in their elections. In reality, even according to their own polling, that is not the case. So these are numbers coming from crypto industry polls that show that almost 70% of voters have had at the time a very or somewhat negative perception of crypto, and that the vast majority, 70% or 80%, were not strongly considering crypto during the next election. But this strategy to convince the public that there was this crypto voter was a very coordinated one among the crypto PACs and the crypto companies. So when one of the strategists was told by a Coinbase staff member that there probably isn't a crypto voter, that this is not a major voting bloc, then the strategist said, then we're going to make one. So essentially, we're going to manufacture this idea of a crypto voter to try to convince the public and these candidates that this is something they needed to sign on to. Now, looking into 2024 and beyond, when Trump took office, we've started to see this strong evidence of quid pro quo deals happening, where Trump is personally benefited or his family crypto companies are benefited by contributions or actions from these crypto companies, whether it's in the political arena with contributions to Trump-affiliated super PACs or his inauguration fund, his military parade, or his ballroom project. Many crypto firms have gotten involved in those types of donations. Then there's also the business end of things. So companies either partnering with Trump businesses or investing in them. That's companies like Gemini and the Winklevoss twins, Cumberland DRW, Crypto.com. Then we're also seeing crypto firms that are purchasing Trump tokens, or people involved with these crypto firms purchasing Trump tokens. So that's people like Justin Sun, who runs the Tron network, who has contributed between $112 million and $233 million to Trump-linked projects like World Liberty Financial, which is his family's crypto company, and other various projects like the Trump meme coin. With Justin Sun, the SEC paused a case against him that charged not only regulatory violations but fraud shortly after Trump took office. And actually today, they've proposed that the case be dismissed with only a $10 million fine and no admission of wrongdoing. Justin Sun was previously afraid to set foot in the United States. He had purchased a $28 million opportunity to take a space flight, and he skipped it because he, again, did not want to enter the United States. Those fears apparently vanished after Trump was inaugurated, and he was a VIP at Trump's meme coin dinner in April of last year, and he was touring the White House. We've seen many, many examples of this. There's certainly very blatant examples with the UAE, which I believe Chris will talk about in a little bit. Crypto.com contributed more than $35 million to Trump PACs and inked business partnerships with his Trump Media and Technology Group. The SEC investigation was ended with no action days after the announcement of the business partnership. And recently, the CFTC filed a brief in Crypto.com versus Nevada, less than a month after Crypto.com's most recent contribution to Trump, supporting their opinion that state regulators should not get involved in policing prediction markets. So this brings us to 2026, the upcoming midterms. There's still a lot that is not finished by the cryptocurrency industry in terms of their agenda. They've had some success in terms of, for example, the Genius Act, but there is open attempts to get market structure legislation passed that are stalled in Congress right now. And so they are very focused on making sure that they maintain a strong coalition of crypto advocates in Congress and actually increase their power over for members of Congress. And so we've seen a massive amount of spending already. They have $221 million on hand, these same crypto PACs that I mentioned. The cryptocurrency industry is also spending outside of that. So they've spent more than $271 million already. This includes $81 million going to Trump-affiliated PACs. And that does not include, that $81 million does not include the investments into Trump businesses or business deals. That is simply the political spending going to Trump PACs. And this time around, there's even new super PACs that have cropped up with explicitly pro-Republican, pro-Trump goals. So unlike 2024, when there was this nominally bipartisan attempt to elect both Democrats and Republicans, as long as they were pro-crypto, we're now seeing a shift where the idea is that they need to be both pro-crypto and pro-Trump or MAGA. There's also a strong link with AI super PACs that have entered into the arena, mostly following the same playbook that crypto developed in 2024. And some of these PACs actually share leadership with the crypto PACs. So, for example, the Fair Shake crypto PAC, which is the major PAC in the crypto space, shares leadership with the biggest two AI PACs. And we've started to see some evidence that these PACs are coordinating in their spending. So, for example, there was spending in Illinois' District 7 against a candidate, and then simultaneously spending from the AI PACs in favor of that candidate's opponent. We're still pretty early into the races. The spending at this point has totaled around $17 million and is focusing on states with early primaries like Texas, Illinois, etc. But I would expect that much of this money is going to be deployed as we go forward, and we're going to see very similar results as in 2024, where these crypto super PACs are spending widely across states, and potentially in more local races as well. They've expressed intention to get involved in races below the federal level as well. So thank you. That's it for me. I'll pass it back to you, Aditi.
Thanks so much, Molly. Really appreciate that breakdown. Um, and I'll turn now to our second speaker, Chris Swartz, who's Senior Ethics Counsel at Democracy Defenders Action, DDA, which is a bipartisan group that uses deep legal and advocacy expertise to fight autocracy, protect the Constitution, and safeguard our American democracy. Before DEDA, Chris was the acting chief of the Ethics Law and Policy Branch at the U.S. Office of Government Ethics, OGE, among many others. So, Chris, I'll pass it to you.
Well, thank you very much. I appreciate that. Just give me a second while I get my slides up here. All right. I hope that everybody's able to see those. Perfect. So, as Molly was saying, she was talking about the special industry lens, looking at this issue about the influence that special industry has, that the cryptocurrency industry has. We've been looking at it from the other side, from President Trump's angle and from the good governance, government ethics perspective, for the last couple of years. We have seen this ramp up. And so since President Trump came in during the second term, we have seen an immense amount of entanglement with the cryptocurrency industry. And we're deeply concerned that that is having an impact on the legislative space, the regulatory space, and the market for cryptocurrency and for other financial services. We have put out a number of reports at Democracy Defenders Action and Democracy Defenders Fund, or 501c3 sister organization, that delve deeply into these issues about how they pose serious conflicts of interest to the president. We are going to provide you with the most recent one that we did in January 13 this year. We also have a Trump crypto tracker, which starts in September 2024 and goes through November. We are in the process of updating that. All of this is on our website at democracydefendersfund.org. And I'm very excited to say that we have a brand new report that will be coming out next week that dives deep into the market impacts of the president's financial interest and his family's financial interest in the cryptocurrency space, particularly as it relates to World Liberty Financial and its stablecoin USD1. To orient you to the conversation and why we have so many questions about what is happening as it relates to the president's interest in cryptocurrency, I just want to share this one number with you. Molly gave us a lot of really good numbers. This is one number that I want us to focus on today. In the last year, it's estimated that the president got about $1 billion, that's 19 zeros, in revenue from cryptocurrency ventures that he is involved in and his family are involved in, including World Liberty Financial, USD1, the stablecoin that they run. And for those of you who don't know World Liberty Financial, that is a company that Donald Trump's family, Donald Trump, his special advisor to the Middle East, Stephen Witkoff, and his family established in September 2024. And it is a governance token. And at the time in 2024, they really had no products. But they came up with the USD1 stablecoin. I'll talk about that in a little bit. But over a year, he has been able to get $1 billion. That is an amazing number. On the right side, you don't see, because of the scale of magnitude the average American income, which is $66,000 and some change. And it doesn't cover passive income, doesn't really change the number that much, and it doesn't cover, it's not the median household, which is, usually a little bit like twice of that number. It wouldn't matter anyways, you still wouldn't be able to see it. So the question is, how did the president get so successful in 1 year? How did he pull in $1 billion? And why? And those two questions are questions that we are consistently asking at Democracy Defenders and trying to find answers to. And we believe that it ties to some serious conflicts of interest, some serious vectors for foreign influence, and some serious vectors for special industry influence, as Molly was talking about. So why do we care about this? One, self-enrichment. There's never been a president that has had outside businesses like these. Trump is the only contemporary president that has had outside businesses of this sort. He is the only one who has been in the place to establish the regulatory market for an asset where he is both the referee, the one writing the rules, and the player. That has never happened in the history of the United States. And so it creates a very serious question about whether he's engaging in self-enrichment and self-dealing. By the way, every other government employee, from the lowest level general schedule employee, like I was a general schedule employee, to the other people that are sitting around him at the White House, to the heads of the SEC and the CFTC, are required to get out of any financial interest that they have that could be affected by the work that they are doing. Even if they had one Satoshi Bitcoin, they would have to recuse themselves, well, that means disqualify themselves from working on a matter that could potentially affect the have a financial impact on that outside asset, or they have to get rid of it. The president is the only person that is exempt from this responsibility besides the vice president. Vice president only has one constitutional duty, which is to break a tie in the Senate. But the president is the only really executive branch officer. And here you see that this has created a loophole where the president has been able to get $1 billion in a year. It's amazingly surprising. What we are asking is, how is this impacting the decision-making process? What factors does it create for foreign influence? What unfair advantages is it creating for people in the cryptocurrency space? And how is it distorting the market in the president's favor? So I want to tell you basically just a little bit about this. We can get into in the moderated questions some more additional questions and sort of dive into some of these issues at a deeper level. But I want to give you a sense of what this feels like so that you are more attuned to it. We'll talk about world liberty here. So world liberty began in September 2024. As I said, it's a governance token. It is not, so at the time, it wasn't really tradable. It wasn't really marketable. And it was really just the families of Woodcoff and President Trump. President Trump has an amazing deal with this organization. Every dollar that they have in revenue, he gets 75% through DT, through a small organization called, well, not small anymore, but DT Marks DeFi LLC, which is one of the many, many shell corporations or small LLCs that he's established for purposes of collecting money from his variety of deals. Unbeknownst until about a month and a half ago, there's also a shadow investor that was Sheikh Tanoon Al Nahyan, who is the national security advisor to the UAE. He is also the brother of the crown prince, and he oversees a $1.5 trillion war chest and their sovereign wealth fund that they can use for pretty much anything they want. He took a 49% stake out very early on in 2024, just as they were starting out, and he bought it for $500 million. That's $500 million. Now, I don't know if anybody watches Shark Tank. I watch Shark Tank. If you go on Shark Tank, right, Mark Cuban, Kevin O'Leary, and the other people are investors, and they ask questions about the fundamentals of the business. If you went up to them and said, we don't have any products, but it's $1 billion company, they would laugh you out of the Shark Tank. So there's a real big question here of what are the economic basis for this type of transaction versus what are the political basis for a transaction like this one. And it's something that we are probing, and that is a question that we should all be asking, because when we see a narrative where the economics don't make sense, it raises the question of whether this is more about foreign influence and buying future goodwill than it is for actually buying into a product because you think that it is a good investment from an economic standpoint. Later on in March of 2025, Binance, we understand it helped World Liberty set up USD1, and then they entered into a transaction with MGX, which is chaired by Tanoon as well, another one of the companies that he's involved in, for a $2 billion deal. That deal resulted in 87% of, or 86% of USD1 being owned or custodied on Binance. And it resulted in a significant value proposition to the president and his family because they used USD1 for that $2 billion deal. And we estimate that that will result in about $80 billion of revenue to the president and his family over an annual period of time. So that's a really interesting transaction. One, because why did they even use USD1? They could have done it in cash if that was what the purposes of the deal were. It seems more like it was intended to help USD1 get its sea legs and create a marketplace for it, which would then result in some money going towards the president and his family. I will also say it's not on the slide. Months after some of these transactions occurred in November 2025, the United States reversed course on a national security decision as it related to advanced AI semiconductor chips in relationship to that they had decided that they could not give to the UAE because they were concerned it would be a conduit to China. And they reversed course on that and released 35,000 NVIDIA Blackwell chips to the UAE, to an organization that's also owned by Tanoon, Sheikh Tanoon. And so, this is the type of thing where we have this question. If there's no economic basis for this type of transaction, and then you see a politically favorable result, how else are we supposed to understand that narrative? I will also touch on this very quickly. We are also seeing that World Liberty and these financial interests, the president's financial skin in the game, are potentially having an effect on a variety of different regulatory and enforcement actions. We have seen almost no enforcement actions under Donald Trump. Gary Gensler and the SEC had about as many new start enforcement actions in the short period of time that he was in office in 2025 as they had for the rest of 2025. So you're seeing a very big slowdown. And then a lot of these, as Molly said earlier, are actually just being shut down, particularly ones dealing with Binance, dealing with Justin Sun, people who have been investors in the president's cryptocurrency ventures. And we are all now seeing, and I think Mark will talk about this as well, is that World Liberty is asking to have a trust charter to have access to the Federal Reserve. And that is before the OCC. We just saw this week that I think Crypto.com got the first charter. It's the first time that somebody has had access, that's a cryptocurrency company has access to our Federal Reserve System. I will speed up and just kind of ask this one question. I think when we get into our conversation, when you look at these data points, there's a real question about whether the market is working for Americans or whether it's working for the Trumps, and whether the game is now being rigged towards the financial interests of the president and his close associates, or whether it's going to be a market that's free and fair, equitable, and competitive for anybody who wants to be in the cryptocurrency space. We don't believe that the president should be able to have financial interest at the same time that he is creating the rules of the game. And we have been working with people like AFR and other organizations to ask that Congress take action. We believe that there needs to be 3 specific actions that need to be taken. One is Donald Trump and other high-level regulators need to be out of cryptocurrency. They should not have it at the same time that they're attempting to regulate it. 2, we need public disclosure of all the information that high-level public officials have as it relates to any cryptocurrencies that they may have, so that we know that there is a transparency backstop against Albano. And three, we need an enforceable mechanisms to ensure that this all happens. I'm happy to talk more about this as we go through the conversation, but Aditi, I appreciate us having a chance to highlight some of these issues.
Thanks so much, Chris. Really appreciate that. And yeah, would love to talk a little bit more about what are some of the pathways so at our disposal. Our last speaker, Mark Hayes, is Associate Director for Cryptocurrency and Financial Technology with Americans for Financial Reform and Demand Progress, where he works to ensure effective regulatory oversight of and accountability for cryptocurrency and other financial technologies. I'll turn it over to you now, Mark.
Great. Thank you, Aditi. And I'm really glad to be joining you all tonight. Give me a moment while I queue up my presentation here. All right, I think we are good. So I have the task of trying to tie this all together and talk about what it might all mean for ordinary people, communities, and families affected by this corruption and by the sort of pay-to-play policy dynamic that Molly and Chris have really outlined so well. So I want to take a minute to talk a little bit about the crypto industry's policy goals in Washington, what they're buying, what they're getting, and what it means for the rest of us. So first of all, I think bottom line, the crypto industry wants access to the benefits of the mainstream financial system, but with few of the responsibilities that come with that. The actions that you've heard about today from other speakers are really about making it easier for the crypto industry to embed itself into regulated financial firms and get access to the pools of investor capital in them and become mainstream. They want to get into banks, investment houses, pension funds, retirement accounts, anywhere they can. But at the same time, industry leaders driving this agenda refuse to embrace the rules that already govern that financial system and provide comparable levels of protection or oversight for people in that system. These rules are necessary to protect the financial system, everyone in it, to preserve market integrity, to protect people, investors, and the real economy. And they're especially necessary when thinking about addressing crypto's endemic volatility, fraud, and crime. Now, this light touch push for regulation is nothing new. AFR has seen this in our work, and it's a dynamic decades in the making in other spaces. It's important to remember that even though crypto's technological underpinnings might be considered somewhat novel, that doesn't really fundamentally change the way finance and the economics of finance and the conflicts of interests or incentives in finance work. That means crypto investment should have the same guardrails as everybody else, by and large. But this push for lightly regulated financial innovation that the industry is driving is actually eerily reminiscent of the same rhetoric that led to deregulation of the financial sector in the 1990s through bipartisan bills that delivered up reckless trading in unregulated credit default swaps, which helped cause the 2008 financial crisis. So innovation is nice, but it's not innovative to profit from ripoffs and crashing in the economy. That's just greed. And so as our colleagues alluded to before, right, Trump has put a series of crypto foxes in charge of the hen houses. We've heard about the crypto champions in the White House dropping enforcement cases. It's a very, very long list. Now, these are the regulators that will implement whatever kind of legislation that Congress has passed or will pass with respect to crypto. We simply can't trust these folks to fulfill Congress's best intents or protect our best interests. And we can't really pin our hopes on fixing it years later. The history of financial regulation is really a history of passing, stopgap measures now and taking a decade to enforce them, only to see them be rolled back. We need to get it right. Any legislation on this matter needs to be robust, prescriptive, binding, and enforceable. And so far, Congress really hasn't been delivering masterpieces when it comes to that. So as an example of that, you've heard some allusion to stablecoins and Genius. We won't get into all of that, but I'll offer up some explanations of what those things mean. Stablecoins are supposed to be crypto's killer app, that basically to deal with the volatility in crypto, you peg the price, give a crypto token a price tag, usually $1, and then back it with a bucket of reserve assets. And this is supposed to be a new way to help pay for things. But stablecoins are far from stable. They depeg constantly despite this mechanism. And they're mainly used for speculation in crypto and criminal activity. And the lax standards in Genius that was effectively written by and for the industry won't prevent dollar stablecoins from depegging. And that could in turn precipitate crypto style bank runs that spread far beyond crypto markets. That almost happened in 2023 when one stablecoin started the crash that Molly talked about, led to a whole bunch of platforms collapsing, and actually contributed to the failures of several major regional banks. But one of our biggest concerns about the current policies being advanced by the administration for the industry, particularly with stablecoins, is that big tech firms now, like Amazon, Meta, or X, could issue their own branded stablecoins directly or indirectly. That means they're effectively creating a form of private currency that they control. And that combines their digital surveillance models with their huge market power to give them unparalleled control over consumers, workers, and markets. That's what the industry has bought with its policy, and that's what we may expect to see unless people push back. So the next big item on the list that is a focus of a big fight is the so-called crypto market structure bill. All the things we've talked about in terms of giveaways from the industry, this legislation is more or less attempting to lock in those changes in law and kind of write them in stone, as it were. And the market structure bill is really a term to talk about all the things that regulate crypto, how it's issued, how it's traded, how it's regulated, how people are protected or not protected in the event of default or scams, what information crypto firms have to disclose, and how crypto interacts with the financial system, et cetera, et cetera. Again, this legislation has largely been crafted by the industry, despite some attempts to modify it here and there. And it's riddled with loopholes and giveaways that ensure regulators won't be able to stamp out crypto's fraud and crime and predatory business models. So there are 4 key areas that we want to just name in this bill that are really important for you to know. First, I think there's been some questions posed about kind of what does this mean for ordinary people. Crypto, the industry doesn't want people buying crypto effectively have the same level of protection that you might get buying a stock or in your 401k. So if this law passes, it really means less information, less protection for your accounts, less ability to sue rip-off artists, less protection from market manipulation, and so on. And the bill allows crypto firms to be both your broker, your investment advisor, your exchange, and your rival trader on that same exchange, which just is an invitation to pick your pocket. To top it all off, it hamstrings state regulators' abilities to help protect investors, as well as plaintiffs, lawyers, and other folks fighting for consumer rights. And that includes even cracking down on scammy crypto ATMs. So second, the bill it fails to stop crypto's surging role in global money laundering. Last year, reports suggest that crypto money laundering exceeded 154 billion. That number needs to be updated on the slide. That's nearly double 2024. And that's probably an undercount. And just this past month, new investigative reporting shows that crypto is central to the activities of drug cartels, human traffickers, and sanctions evaders. From the industry's own lips, they're saying crypto is being used in numbers never seen before in these spaces. But this legislation, at best, pays lip service, and at worst, exempts large sectors of the industry from the same kind of requirements we expect as a minimum for banks and other financial actors, which basically means they can profit from these ongoing activities that cause human misery. Probably third, or what number I'm on? I'm third, we'll call it third. And probably most important, all of this increases the likelihood and severity of the next financial crash. So by embedding crypto into the foundation of the regulated financial system, but without providing similar protections, it increases and amplifies risk. It will encourage banks and Wall Street firms to get in on the game and engage in speculative activity without those guardrails, because they know they can make $1 on it one way or the other, and are less concerned about what happens with the fallout. And so that means the next crypto crash could reverberate throughout the economy. It won't just be crypto investors that get hurt. The fallout could mean bank failures, layoffs, foreclosures, generational losses of wealth. And because crypto is enmeshed in the system, it's quite likely the billionaires and their firms could secure government bailouts. Again, a repeat of 2008. And that's already underway with some of the banking charters and access to Federal Reserve protections that the crypto industry is getting under this administration. So, and last, we talked about Trump's crypto corruption, and you've heard all about the problems from Molly and Chris. I won't go into them, but these are really unprecedented examples of conflicts of interest and concerns about corruption here. And they're all shocking. And I think the important point is we can no longer be able to disentangle Trump's family fortunes from his policy positions and what he's doing on behalf of the American people. And this legislation doesn't prevent Trump and his family or any other person in his position from raking in crypto profits like this. It does not contain provisions like the ones Chris outlined. And so as a result, it may literally enrich the president and the worst of his sort of pro-totalitarian crypto billionaire allies at all of our expense. So where are we at? Basically, the bill is currently stalled in the Senate. The industry and the White House are demanding total capitulation from senators, but the banks and security industries are actually digging in their heels on a couple of revisions. Even they see some of the dangers here and don't want to upset the apple cart. And the public is increasingly skeptical of the industry hype and appalled by crypto corruption. And as an example, all of the Democrats on the Senate Agriculture Committee voted against a lopsided version of this bill when it came up for a vote recently, including some that supported the stablecoin bill and some who otherwise might have supported the half measures in this bill. But they chose not to in this instance because of concerns about Trump's corruption, concerns about money laundering, and some of these other risks. So it shows that the pushback that we're creating in our advocacy and work with you and many other allies is taking hold, but the industry pressure continues to be intense. So there's a lot at stake. And I think what the good news is, the industry thought at this point they would have steamrolled this through by now, but we have continued to stave them off. And that's why we're talking tonight. We need your help in doing that. So with that, I'll pass it back to Aditi, and perhaps we can have some questions to tease some of these things out further. Thank you.
All right, thank you so much, Mark, and to each of our panelists. I really appreciate it. Yeah, so I think just kind of drawing on some of the themes that we heard from each of you, I'd really like to go into some of the ways that these things that you've observed and you've just shared with us, what kind of makes us in a brave new world here versus some of the trends that unfortunately we've been tracking for a long time. So, for example, Molly, we're in a post-Citizens United world, and so big corporate spending isn't really new. So can you walk us through a little bit about kind of like what makes the crypto industry and sort of now the interrelated aspects of the AI industry, what makes this aggressive strategy distinct and, what sort of sets it apart from what we've seen in terms of like high volumes of political spending in the past?
Absolutely. Okay, I think you can hear me. Okay, cool. Yeah, so that's not a great point. Corporate spending is not new. And it's probably not surprising that the crypto industry is engaged in it. But one thing that is very different is the scale. So when you think of corporate political spending, you think of, like I said earlier, big banks, big pharma. These are huge, huge industries spending a significant amount of money. When it comes to crypto is actually a very small industry comparatively, but it's spending an enormous amount of money. So its influence and its spending is really outsized. Then there's the strategy that they've been taking. So they've been doing these very strong PR campaigns, both towards candidates and towards voters, trying to convince everyone that, this is in your benefit. We're fighting for you, the little guy, in ways that you often don't see from other industries. They're also very, very aggressive in their tactics. They spend very heavily in primaries, which is somewhat unusual for corporate spending. And it's often really to send a message. So when we saw that huge spending in 2024 against, for example, Katie Porter, that was really to show the power of the crypto PACs and to threaten other candidates that might be tempted to oppose some of this legislation or speak out against the crypto lobby. And I think it's been fairly effective because we have seen Congress people, especially those who are up for re-election or who have potentially less secure seats, shy away from criticizing crypto. And we've seen very blatant threats from members of the industry to sitting members of Congress. So, for example, fairly recently, when there was some debate happening over some of these bills that Mark was just describing, the CEO of Coinbase tweeted that he was going to be scoring Congress people on their pro-crypto stances, and essentially threatening them with voting them out or spending against them in the upcoming election cycle. So, we're seeing this very strong influence campaign and this sort of cudgel that the industry is holding over both sitting members of Congress and prospective candidates with this multi-million-dollar war chest, which is somewhat different from traditional corporate strategy.
Thank you. That's super helpful. And I think, Chris, I kind of want to ask an analogous question here in terms of, some people dismiss Trump's crypto ventures as just like maybe it's a sideshow, maybe it's an aberration. It's just another scam from a scammy man, right? It's like Trump University. It's appalling, but it's not as bad as like the other things that he's doing. Or they just want to draw a firewall and say, Trump's corrupt crypto ventures shouldn't be confused with crypto as a whole. So what arguments or examples do you use to kind of demonstrate how inherently concerning these deals are, how they go to the heart of ethical governance principles, and sort of how are they undermining the safeguards that we have for our democracy?
Yeah, that's a great question. And there are several points I think that makes sense to touch on. So one is, the incentive structure for Donald Trump in utilizing his name and his office and his authority and, sort of the credibility that goes along with it is the same with the Trump universities and the Trump steaks and the Trump steak knives and the wines and all that. The difference is that those are regulated industries where there are other highly competitive players and what the industry is supposed to look like. This is sort of in a way, he's writing the rules for the industry that he's creating. And he's able to use the power of the pen to be the referee, to be the rule writer, and to be the star of the game. And if he wasn't going to be the star of the game, he has created the rules and the system to make himself the star of the game. That's how you get $1 billion in a year, right? There's no economic basis for him to have gone that. USD1 is now the third largest stablecoin by market cap. How does that happen in mere months? That doesn't make sense from an economic standpoint. The other thing is, it seems to be affecting a large number of other policies, right? So we have crypto-specific policies like the oversight of the enforcement in this space. The SEC and the CFTC have basically taken the ball and gone home. There's reporting that the CFTC's enforcement role division basically doesn't exist anymore. Former CFTC enforcement people said if I was a bad person, I would get into crypto right now because you can get away with quite a bit. That is very troubling to hear, right? And we shouldn't have to rely on the goodwill of people in the crypto space and the benevolence of our president to suggest that the markets will operate in a certain way. We should expect that they're well-regulated, highly competitive, and that there is an efficiency to the market that allows for the invisible hand to dictate what happens and not the hand of the president. And so that is, I think, probably the most striking. The other thing is you see things like Mark had this on his screen. Binance had their compliance officers identified that there was $1.7 billion that had gone to sanctioned officials in Russia and in Iran through intermediaries that were operating on Binance. Where is the OFAC enforcement action against Binance? If we don't see that, I think that's telling because that is a deeply concerning thing. We're in war with Iran and they have been, and we've been sanctioning Russia for decades under the Maginski Global Act and other acts that were created just for purposes of limiting money going to Russia. But yet that exchange is not going to come under any enforcement action. That is a deeply that they bought themselves out of the enforcement regime at that point, and that is deeply troubling. And so I think at least those 2 points are ones that I would make to that question.
Thank you, Chris. That's super helpful. Mark, I think wanting to kind of zoom out a bit to the systemic implications that you were walking us through here. I think a question I have is, I think for as long as I can remember, I've heard that we're in a crypto winter. It's happened like at least thrice in the past couple of years, right? The biggest was in 2022 with like $2 trillion wiped out, but there have been others. The latest was in October, when crypto traders kind of lost billions after a tariff announcement, and sort of that spooked investors, caused a crash, et cetera. And so this time, as everyone has laid out, crypto has lined everything up and has everything going for it. The president is a champion, the regulators are captive, Wall Street is knocking, trying to sort of mainstream this. And at the same time, whenever there is this kind of correction or crash, the industry still blames regulations for their troubles and says it's the critics that are sort of preventing the industry from fostering innovation and doing the financial inclusion. So why should we be skeptical about those rosy claims, and what are the solutions that we should be thinking about instead?
Sure. Thanks, Aditi. That's a good question. And I'll try to answer it quickly. I think, first of all, look, AFR and others on this call I know have been fighting the fight for financial justice for a long time, and there's no love lost for the traditional financial system. There are many, many problems with banks and Wall Street investment firms in terms of exploitive, extractive activities, risky behavior, et cetera. No one's here to defend that. In fact, all the work that has been done over the last 2 decades to try and create accountability measures to address those problems is a reflection of those concerns. And so, look, there are lots of people who are frustrated by what happened in 2008. They're frustrated where they are now. Those are legitimate concerns, and people are looking for solutions, alternatives. And no one can fault them for that. I think the problem is what the crypto industry has come in. They've correctly identified parts of the problem and offered a solution that sounds exciting, but doesn't really hold up well to scrutiny. And I think for people in the crypto space, so much of it is new and novel. They're sort of reinventing things that have been explored before. But when you look at the history of financial regulation, arguably that history is one where new actors come into a space and claim they have a new product to offer that's built using different assumptions, different technology, different approaches. And someone says, oh, well, that's a loan. And they say, no, it's not a loan. It's something different. And therefore, a different set of rules should apply to us. That was true when payday lending came onto the scene, offering people at the margins, desperate for some way to make ends meet, a product that had a low barrier to entry, but really high costs. Sometimes they were hidden. It was true with subprime lending leading up to 2008. And the same rhetoric sort of applied. We hear on Capitol Hill, this is a tool for financial inclusion. You're standing in the way of people's, piece of the American dream. That's the same thing people said around subprime lending. And not only did that sort of faulty premise contribute to the financial crisis in terms of what then happened to those loans, it was a raw deal to begin with, right? People were being sold things they could get better products, but someone was going to make a lot of money off selling them those products. And so when we look at crypto, we don't necessarily see, a venue for financial inclusion. Instead, we see a pattern of predatory financial inclusion where people are offered something because the existing system doesn't work, but that comes at such a high cost. And when you look at crypto, there are many, many reasons where the facts don't match the story that's being told. For example, if you want to buy a stablecoin, often you actually have to have a bank account to get it on a crypto platform, even though crypto promises to bank the unbanked. So I think there's a lot of resources we can share on our website that kind of unpack this stuff. I know Molly has a lot of great work to share, just looking at how the industry works. But I think the bottom line is a lot of financial problems are hard but simple, right? Like people need access to credit, they need access to easy ways to save for retirement and have financial security. They just need easy saving things. We have tools to fix those, and some of those are public options, right? Tomorrow we could make it so that banks speed up how fast payments go through using a program called FedNow. We have ways that we could offer public banking for low-income people at very low cost, or ask banks to provide free bank accounts. There are a lot of solutions. It's just that they don't have venture capital firms backing them and promoting them with billion-dollar PR campaigns. So I think the response to that, Aditi, is like, before we start assuming that the premises of this question are solid, let's check under the hood, and let's also really look at what problem we're trying to solve and what tools do we have before we essentially conduct an uncontrolled experiment on our economy and our financial system.
Thank you. Really appreciate it. I know we are running close on time, but we have time for maybe like one or two questions from the audience. So I think the first one I wanna raise is and maybe this is for you, Chris, but also open to you both, Molly and Mark, if you have something to add. But in this current moment, are there pathways to having these crypto white collar crimes be investigated and prosecuted? Like, if the national DOJ is not an avenue that's available to us right now, are there sort of other causes of action or other ways that we could see accountability nonetheless?
Yeah, so the answer is yes, but it's qualified, and also this is part of the discussion that we've been having at the market digital conversation about preemption. There's been a push for preemption, and I think that that is a scary push because our state AGs are very good at policing consumer redress issues, financial redress issues. And so, yes, at the state level, there are some tools available. There are some preemption issues that already exist under the CEA and under the SEC enforcement regimes. But for the most part, there are existing laws that could be utilized when it comes to these specific things. And there's certainly private plaintiffs that can bring lawsuits when there are particular harms. Now, the issue is, and this gets back to the legislative space, is somebody has to get harmed before you're able to bring a lawsuit. When you create a regulatory scheme that ensures that there are checks, monitorship, that there are hoops that you have to go through, transparency, that stops it. When you look at, and I'll stop here because I know we're pretty close to time. When you look at a prospectus for a public company, you have a lot of information that sophisticated users and even regular everyday people can look at and make informed decisions. If you look at a white paper that's put out by a cryptocurrency entity, it is an advertising document and it can be hiding all sorts of bad things. It makes its technology look like it's new when it's just rehashed. There's no real good system, and that information asymmetry is highly problematic to the market. And so, what we would hope is that people do not have to get hurt first. But if they do, there are some ways that they can do it. Again, you have to get a lawyer. So, it'd be better if the system worked better first.
Thank you. Really appreciate it. And then really quickly before we close, Mark, I just wanted to kick it back to you. We had a question on whether the Genius Act provided any protection from crypto in our broader banking system.
That's a great question. I think the short answer is not enough. And I think one of the challenges with financial regulation is sometimes when you make something look safe, it actually amplifies the risk. So stable coins, again, these assets that have a price pegged to the dollar and backed by reserve assets, kind of mimic two things in traditional finance. One is bank deposits. When you buy a stable coin, you're basically giving them $1 and they're giving you a coin, and they're making you a promise that if you come back later and want to redeem that coin for the $1, they'll give it back to you on demand and in full. You do that also with a bank. That's what a bank deposit is in some sense, right? And the difference is that Banks are regulated by a comprehensive set of rules that make sure that that bank does it. The bank is actually serving a public utility, if you will, and that's why we regulate that way. So things like deposit insurance, the capital requirements that banks have, they have to hold money, cash on hand in the event of market downturns. Uh, Supervisory rules, like intense scrutiny by the banking industry, is kind of the best we know how to keep banks safe. And sometimes it works, sometimes it doesn't, but we know how to make it work. Stablecoins are really only backed by those reserves, and Genius attempted to layer on the veneer of some of those rules. But unfortunately, it doesn't go far enough in many respects. Some of the reserve assets behind them are unstable, or could be unstable. The oversight of the issuers is vague and open to interpretation or gameability. There's a long list, and we have some resources on our website that talk a bit more about Genius. So, unfortunately, that's the rubric. And I think we've been pushing the Senate so hard on this because some senators are standing firm on this, right? And that's why it's so important that folks here continue to speak out on this. They recognize the risks. They're willing to not settle for less. We've been calling on them to only support legislation that really hits these marks, but others are feeling the pressure and are really sort of short-sighted about it. They think if we just move the ball down the field, it'll be enough. And that's really, in our experience, not how financial regulation works. And I think Genius, unfortunately, we're going to have to deal with the fallout of that as that rule is implemented. We'll see what happens.
Thank you. Thank you, everyone. I think we've reached the end of our time together this evening. So I just want to take a moment to give a round of thanks to our speakers for sharing your insights and your perspective. And importantly, to the audience, all of you who've joined us this evening to listen, to ask important questions. And we hope that you're also able to spread the word. We're going to follow up over email with everyone to make sure you have several resources, including the links to everything that was shared today in the chat, as well as a recording of this video. So you'll have the slides through that as well. When you get that email, we're also going to add one more really important thing to ask you. Several of you have been asking, like, what can we do? And there is so much that we can do. As Mark pointed out, this is actually sort of stuck right now and in a really crucial moment where being able to take action, contacting your senators is actually really, really going to make a big difference here. So we'll have a link for you to be able to do that. We know that on this issue, hearing from their constituents does make a difference. And so we hope that you'll be able to join us in calling on policymakers in Washington to resist the crypto industry's undue influence, as we've highlighted here today, and start to hold President Trump accountable for these corrupt and conflicted crypto ventures. And the industry's pressure to advance policies that enrich the president and promote a widespread, dangerous deregulation of the financial system is intense. But we've faced similar odds in the past and we have prevailed. And the only way to do that is if all of us together take action. We know for a fact that when activists like you engage your decision makers directly, it does make a big difference. We've heard from several of the people that are on the front lines of this fight. Everyone you heard from tonight is not only sort of a thinker on these questions, but they're a doer. They're figuring out different ways to put the spotlight on this spending, to fight back on these corrupt measures, and to really push policymakers to think bigger picture and more holistically about the ways that we need to protect each other from this kind of financial fraud. And what we need from everyone in the audience is for you to add your voice to that debate. So we really just want to ask you to please join us in this fight. Thank you so much for turning up today, and we're excited to see you out there and move this fight forward. Thanks and have a good night.